Hello and welcome. You're watching BTTV. I'm Tanya Neja. This is Market Today, a show where we'll get you all the latest market updates, stocks and sectors that are buzzing and much more. Well, the long-awaited G20 summit in New Delhi is now over, and diplomats from across the world are hailing India's successful presidency. And guess what? The Indian markets are also celebrating the grand success. Well, if we look at the levels at this point in time, clearly bulls are in action on the Lal Street today. You can see we are just, few points away from that 20,000 level important mark. 19,986 is the level where we are at as far as Nifty is concerned. 160 points uptick there, and 67,000, that level is also done and dusted now for Sensex. So 89 points higher there on Sensex as well. Clearly bulls in action. And how? And let's take a look at the broader markets as well and see how the broader markets are doing at this point in time. And of course, it's all-time high levels for the mid-cap as well as the small-cap index for you. And we'll pull up, those indices for you as we speak. The action is actually taking place there. So if we talk about the mid-cap levels, the mid-cap 100 is at 41,435 points, 1% uptick there, and small cap also 13,000, that is the level on small cap. So clearly all-time highs for broader markets as well. Let's do one thing, let's pull up some of the gainers for you from today's trading session. So clearly some of the Adani stocks like Adani ports are on a roll, and this is on the top of the economic corridor announcement from the G20 summit. Clearly 880 is the level on Adani ports, 7% uptick there, and Adani Enterprises, one of the Adani group stocks, that is in action today, 4% uptick there as well. Some of the power counters, they are also buzzing in today's trading session, 2% uptick on Power Grid. Then there are some of the metals, counters as well that are supporting the markets like Hindalco, Apollo Hospitals, one of the other top losers, top gainers for you, and UPL also 2% uptick there as well. Let's look at some of the losers also on the flip side. Some of the stocks that are not supporting the markets as we speak. Coal India, the top loser for you, 1% downtick there. 279 is the level where we are at. ONGC and Bajaj Finance, some of the other top losers for you. And let's look at some of the other counters as well. So L&T is also one of the top losers. But let's do one thing, let's welcome our guest on the show today and find out what's really next for the Indian markets, and are we really gonna touch that 20,000 level mark today or this week maybe. So we are joined by Nilesh Jain. He's the AVP of Derivative and Technical Research at Centrum Broking. Nilesh, always good to have you on our show. Thank you so much for taking the time out and joining us. Clearly bulls in action on the Lal Street today. We had a great G20 summit as well. So markets clearly celebrating that as we can see in today's trading session. But what's really next, and how close are we to that 20,000 important level?
Very good afternoon to you, Tanya. Well, as far as the 20,000 psychological level is concerned, it's just a matter of time. Quite possible that today only we might see those levels coming in. Well, it's just a number that we just are eyeing on, but I'm looking beyond that. I think Nifty is heading towards 20,300 to 20,500 mark. Quite possible that we might see Nifty hitting those levels in the September series itself. Looking at the Bank Nifty participation in last couple of trading sessions, that is giving some sort of confidence where we are witnessing an outperformance on the Bank Nifty front. So if you look at on a daily time frame chart, Bank Nifty has formed a symmetrical triangle sort of formation. It has already given a good breakout on that as well. So 45,000 is a psychological support now. On the upside, target for the Bank Nifty is coming around 46,000 in this spot. So that's the level that we are expecting in this week itself. So overall, the bias is looking very much positive. We have already seen broader markets are hitting all-time high levels in last couple of weeks now. So looking at the overall setup, I think Nifty is all set to move towards 20,300, 20,500. And today, again, in the spot levels, we have seen a fresh all-time high. Nifty has taken off its previous high of 90,991. And it's only 4 to 5 points away from that magical figure of 20,000. But I think soon after the breakout, we might see a short covering on the call front where we have seen a lot of call writers were active at 20,000. So if Nifty sustains above 20,000, which seems very much likely, then we are all set to move towards 20,200, 20,300, 20,500 eventually in the September series.
Okay, it's already 19,996. Oh my God. I mean, I really can't believe it that we're all set to hit that 20,000 important mark. Okay, let's wait for that. But Nilesh, you were talking about Bank Nifty only, and if we look at some of the PSU, banking counters, and we should pull up that for you, Canara Bank, and then Bank of India, IOB, PSB. These, banking counters are on a roll in today's trading session, and it's clearly the pack that is contributing towards the rally that we are seeing at this point in time. What are your thoughts when it comes to banking space, especially PSU banks?
As I mentioned at the beginning of the commentary, so the Bank Nifty structure is looking very much on the positive side. So PSU banking space, which have started joining the rally in last couple of trading sessions. So counters like State Bank of India, where we have seen a good base formation, so that is looking quite promising at current level for the upside target of 620 to 640. So it can be bought at current level and on decline, keeping stop loss below 570. The another counter that we are liking from this particular space is Canara Bank, where we have already witnessed a 6% spike in today's trading session. So that particular counter is also showing strength and looks positive for 380 to 400 sort of target in the near term. And apart from that, one small counter from the PSU banking basket, that's the Bank of India, Bank India. So this particular counter has given a multi-year breakout on daily time frame as well as on the weekly time frame chart. So this is looking like it is ready to move towards 110 to 115 on position point of view. So it can be added at current level and not decline. Good price and volume breakout. The breakout can be seen in today's trading session. So this particular counter can also be bought at current level, keeping stop loss below 95.
Okay, by the way, it's 19,998, just 2 points away from that 20,000 mark. And let's discuss about that mark only, Nilesh, because first of all, I want to congratulate all our viewers, all our investors, traders who have 20,000 is now done and dusted on your screen. It's the important mark we have been waiting for, and 20,000 on your screen, now done and dusted on Nifty. Congratulations to all the investors and traders who have participated in the rally, in the ongoing rally, and what a stellar run. I mean, when it comes to broader markets, when it comes to railway stock, defense stocks, clearly markets celebrating the grand success of G20 summit, and 20,000 mark is now done and dusted. Your thoughts, Nilesh, first of all, on this important mark, and what's really now next for Nifty? I mean, 20,000 is also done now.
Absolutely, Tanya. A big congratulations to everyone, specifically the retail participants who kept the faith. And we have seen a lot of interest of late from the retail investors in spite of the selling pressure that we saw from the FIIs. So even if you look at the FII's long position in index, which is somewhere around 55% to 57%, but it is the retail who kept the momentum going, and because of that, we are witnessing 20,000 magical figure that has been tested right now. So as I mentioned, I'm looking beyond this particular 20,000 mark. We are likely to move towards 20,300 to 20,500. So overall, it's a good level that we have achieved so far, and September series historically have been good. So in this series itself, we can expect further momentum to continue.
Okay, absolutely. So 20,000 level, that is the level that is now done and dusted on Nifty. And now I want to know it from you, Nilesh, that we have been listening from a lot of experts that now is the time to some, actually the street is divided. Some are saying that the rally is overheated, some are saying you can still participate, but what according to you should be the right strategy at this point in time and at these levels?
Right, Tanya. I feel that the momentum has just begun, specifically in the Bank Nifty. So looking at the underperformance that we have seen in last few months now, So this is the first time in this September series we have witnessed a good outperformance on the bank Nifty front. So the strategy should be to stick to the quality names from the banking space, as we discussed about PSU banking names like SBI, Canara Bank. So just want to highlight few index heavyweight private sector banks. So HDFC Bank is one of them where we have seen a lot of underperformance. So the good part about this 20,000, the rally that we have seen is that we haven't seen participation from the index heavyweight counters like Reliance, ICICI Bank, HDFC Bank. So all these counters, in fact, are trading at discounted level in spite of the fact that Nifty has hit all-time high. So I think if these heavyweights start participating, so we are likely to see further high level. So this is not yet over. The party has just begun, specifically in the large cap. Although we might see some consolidation in the broader market, but I feel that the private sector bank is a good space where one can eye on. And I just want to highlight few
Shells are with
counters.
us.
So just want to highlight few names from the banking heavyweight. HDFC Bank is one counter that is looking positive for the upside target of 1680 to 1700. Can be bought at current level. Good risk and reward can be seen. So 1600 should be the stop loss. Apart from that, Axis Bank has hit a fresh all-time high in today's trading session. So that particular counter is looking positive for 1050 sort of level in the near term. One can keep a stop loss below 975. So these are the few index heavyweight that are still looking positive on the chart. So focus should be on the sectors, focus should be on the stocks.
Absolutely, got that, Nilesh. And Nilesh, I want to mention some of the sectors that we have been talking about, and some of the sectors that have really supported the markets and supported the rally that we have seen so far, the stellar run, the dream run, I would say. Defense stocks, railway stocks, and the broader markets. So what should be the strategy now when we talk about, mid caps, small caps, and then of course the railway pack and the defense pack? Do you think now is the time to book profit, or what should be the right zone, right buy zone now?
Well, you have rightly mentioned we have seen a lot of spurt in railway stock, in the broader markets.
Yeah.
All the different counters have done quite good. So I feel now it's a good time to take out the profit, specifically take out the part profit, if not the full. I
Right.
think there could be possibility of some amount of consolidation, as I mentioned, in the broader markets. Whereas the comfort is still coming in the large cap. So the name that we discussed just now, so Reliance, HDFC Bank, ICICI Bank, all these counters are still available at a corrected price. Wherein if you compare the broader market, which is trading at
Okay.
all-time high. So
Okay, absolutely, Nilesh. I'll get back to you. But meanwhile, our markets editor, Shell Bhatnagar, is with us right now. Shell, what a wonderful day for the Indian markets. 20,000 now is done and dusted on Nifty. Your thoughts?
Hello, Tanya. And of course, you need to tighten your seatbelt and wait for better and better days. See, what has happened is that Nifty is now playing catch up with Midcap and smallcap index, which have already hit record highs much earlier. And, there is a dramatic outperformance on midcaps and small caps relative to Nifty. So Nifty is now playing catch up. And you'll see these small bouts of profit booking. But one must be very sure that, the tap of liquidity is now directed towards Nifty. And you're going to see better days.
Absolutely, Shell. But now what's really next for the markets? We have been waiting for that 20,000 important mark, but now that mark is also done and dusted. But what's really next now?
Well, Tanya, we are sitting in September, but Diwali's come a bit early. And so is Christmas going to come a bit early. So I would imagine that we just need to sit sideways. If you're sitting on quality stocks, definitely take some profit away from the table, because money in the bank is more important than money in your trading book. So definitely you need to book some profit. And you know what, I just have this lovely chart against which I'm seeing the Nifty at this point of time. So 20,084 is coming. And we'll see, like I said, better days from now on. And if you're sitting on some quality stocks, it's best to just sit tight and do nothing and enjoy the rally.
Okay, absolutely. Sit tight, do nothing, and enjoy the rally. That's the word coming in from Shell. And now let's get back to Nilesh and find out the opportunities. Any top technical ideas, Nilesh, lastly, that you want to recommend to our viewers? I mean, especially at these levels, because I'm sorry, I really cannot, control my excitement, because, we have been waiting for this, level, this important mark. It's been days. So now it's done and dusted. But any top technical ideas that you would like to share with our viewers, especially at this point in time?
Yes, Tanya. So as I mentioned, the financial space as a whole is looking very much on a positive side. So the stock that we are liking, first of all, is Piramal Enterprise Limited. So PEL is the symbol. This particular counter has given a multi-month breakout on daily time frame chart. So PEL currently trading at 1125 can be bought for the target of 1150 to 1170. The stop loss should be placed below 1105. So 1105 should be the stop loss. Apart from that, we are looking at the pharma stocks, counters like Glenmark. So that particular counter is looking positive for the target of 830 to 850 in the near term. So it can be bought at current level and on decline, keeping stop loss below 795. And lastly, even if you look at the overall auto space, few auto names that are still looking extremely positive on the chart. In fact, remember Nifty Auto Index was at all-time high. So Hero MotoCorp is one counter that is looking positive for the upside target of 3150. One can keep a stop loss below 3000.
Okay, absolutely. So these are some of the top technical ideas that you can bet on as we speak. But Nilesh, talking about some of the sectors that are buzzing, and we should pull up, some of the power counters that are doing really well in today's trading session. Any top picks that you would like to recommend from the power sector, and especially at these levels?
See, power sector, we have seen a lot of good positive momentum in last few trading sessions, and slightly looking overbought on daily time frame chart. But one counter that has given a fresh breakout, that is power grid. So this particular counter on the back of a fresh breakout on technical chart is looking very much positive for the upside target of 285. So it can be bought at current level, keeping stop loss below 255. The upside is open for 282, 285. And apart from that, a few names where we are witnessing some amount of profit taking, that's the PFC, REC, and also Coal India. So these are the counters where it is better to avoid trading in, avoid getting into. Looks slightly overbought. Could be possible that we might see some profit taking going forward. So one has to be, stock specific within this particular space as well.
Okay, absolutely. And talking about one such other space as well, and that is sugar space. So sugar stocks, along with ethanol production companies, they also gained up to 15% in today's trading session, and this is on the back of the announcement of a global biofuel alliance at G20 summit. So your thoughts on sugar space and any stocks that you like from that particular space?
This particular space, usually we see sort of a news-based momentum. So today we are witnessing such momentum, and I feel that this particular move that we have seen might continue going forward. So within this space, a few names that we are liking. First one would be Renuka Sugar, where we have seen a flag and pole sort of formation breakout in this particular counter. The upside is open for 58 to 60 and can be bought at current level on decline, keeping stop loss below 51. The another counter that we are liking within this space is Balrampur Chini. Today we have witnessed good price and volume breakout, but it needs to sustain above 425. If that happens, then going forward, we might see the stock moving towards 450 to 460 as well. One can keep a stop loss below 495, and this particular counter can also be bought on declines.
Okay, absolutely. Nilesh, you stay with us, but let's go across to my colleague Sakshi Batra, who is joining us right now. Sakshi, 20,000 level. Now done and dusted on Nifty. We have been waiting stellar rally when it comes to broader markets, railway stock, defense stocks, and some of the other sectors, that have participated in this dream run. Your thoughts on this rally and of course on this 20,000 important mark?
Absolutely. We had been waiting and how for this level. 5 attempts in the previous time when we had seen the Nifty making the attempts towards 20,000. It always kept on falling back. 5 attempts and 5 failed attempts at that. But this time around, this 20,000 mark comes just a day after the G20 summit. Remember, I was speaking to our managing editor, Siddharth Zarabi, when he was discussing on day one when the declaration was hit. And I did say, and I pointed out that, the markets had already hit a record high valuation of $3.8 trillion. And everybody was now talking about how 20,000 could be coming in on Monday's session. And that's what exactly has happened. And 52 sessions is what it has taken for the Nifty to climb from 19,000 levels to 20,000 levels as well. Always whenever we see such milestones coming in for the Nifty, we've seen the biggest and the heaviest market weighted sectors and counters really contributing and leading from the front, be it the banks and the ITs. This time around, it's been a complete contrast. We've seen those sectors wake up from slumber like PSUs, railways, defense, shipping. They have never participated. In fact, they had also been biggest wealth destroyers for all those investors who had invested for decades in these companies, and they had only been reaping the benefits of dividends and not really seeing momentum built up. But these are the companies, even in today's session, if you see, it's NTPC, Coal India. These are the stocks that are contributing in the weightage of the Nifty as well. And what's stunning to also know is that the experts still believe, despite this kind of a run-up, despite the valuations turning expensive, because of the India factor, it's a completely different set of fundamentals that we are sitting on, and this rally is here to stay. I was speaking to Atul Suri, our market master of the day, and he said that he already had a 21,500 to 22,000 kind of a target price for the Nifty, and that's what he said, that I do believe that there is nothing that is impossible, and Indian markets are the best place to be in. We did ask him that, if somebody wanted to really get the benefit of diversification at large at this point in time, which are the markets that he believes in? He said that he shifted out of the US to come back to India, believing in the India growth story. And if somebody is here to stay for the long term in the equity markets, it is the Indian equity markets that one can create massive value from here on, Tanya.
Absolutely, Sakshi, you said it, and experts have been talking about India's growth story, India's absolutely the domestic growth story, and they have been believing in this story as well. And some of the sectors, like you rightly mentioned, like railways, defense stocks, broader markets, they continue to outperform in how mid caps and small caps, hitting all-time high levels on a daily basis. And 20,000 is now done and dusted. Now we have to wait, wait and watch that what's the next level for Nifty. So if we talk about the technical charts only, Nilesh, and this is for the viewers who have just joined in, what are the levels now to watch out for, like the resistance, the important support level as far as the Nifty is concerned, and what's really the next level for Nifty 50?
Well, Tanya, as I mentioned, 20,000 has already been taken off. The level that we are eyeing would be 20,300 and 20,500. I feel that within in the September series itself, Nifty is likely to move towards 20,300 to 20,500 mark. Given the fact that we have already witnessed a good participation from the Nifty IT index, which I feel that it may continue to do so. And apart from that, a few index heavyweight where we have seen a strong reversal. Just want to name few counters. So Reliance Industries, HDFC Bank are amongst them. So looking at the reversal, I feel Nifty has just begun the fresh move from here. And 20,500 seems very much on the card for the September series.
Okay, absolutely. And let's pull up some of the railway counters from today's trading session, because Nilesh, if we see the price action there, these stocks have been buzzing and these stocks have been delivering multi-bagger returns. Let's pull up IRCON, let's pull up RVNL. RVNL is, by the way, 17% up in today's trading session, and these stocks have been on a roll and the outperformance continue as we speak. But any stocks at these levels that you would would like to recommend, because we are still looking for the right buy zones. If somebody has not invested in the railway pack, or let's say the defense pack, any stocks that are still available at these levels?
Well, Tanya, the name that you just highlighted have already given a good return in a very quick time. So it's not advisable to get into these counters at current level because the risk and reward is certainly not favorable. Even if you look at the counters like RBNL, where in this particular month itself it is up close to 44%, whereas IRCON has already given a return of more than 20%. So I think at current level it is better to stay away from these fancy names. We might see some consolidation going forward. Whereas one particular counter which has been one of the underperformer within this space, although in last couple of sessions we have seen good formation of higher top and higher bottom, that's IRCTC. So this particular counter can be added in the portfolio given a time frame of let's say the next 3 to 5 months point of view. We may see the upside momentum to continue towards 800 to 850. So it can be bought at current level and on decline, keeping stop loss below 680 for the upside target of 800 plus.
Okay, absolutely. These are the stocks. And Sakshi, we have been talking about, and you have also been discussing, I've seen in the morning shows as well, about the railway, PAG and the defense counters. So you have been talking to a lot of experts as well. I mean, some experts, believe that the rally is overheated, and some believe that, we still have the levels that we can touch going forward as well. What are your thoughts, and what do you make of this rally that we are seeing at this point in time?
That's right, Tanya. We've been speaking to experts every time we do try to raise any sense of caution with the kind of move that we've already seen in some of these defense, shipping and even railway counters. Every time this bull rally is stunning us with the kind of move that happens, and any kind of caution gets thrown out of the winds. And what we get to see is something that is unparalleled, unseen before. Let me just bring out for all our viewers some facts and some data points as to how this 1,000 point surge of the Nifty from 19,000 to 20,000 has taken place. This is the fifth fastest 1,000 point surge that we have seen. With this, the Nifty index has gained 3,150 points since the time it made a low this year in 2023 of 16,828, and that was on March 20th. And from that time, we've seen a 3,150 point of a surge. Among the top contributors to this rally, still crossing the 19,000, Reliance Industries led the pack, followed by Infosys and Larsen & Toubro. And the three stocks contributed half of the 1,000 point rally that we have seen. However, HDFC Bank, Kotak Mahindra Bank, Asian Paints, UPL, they have not at all participated in this surge. However, HDFC Bank did play a key role in the reversal of the index that had started in the September FNO series as well. In the percentage terms, let me tell our viewers, PSUs like NTPC and Coal India definitely remain the top gainers, while UPL, Britannia and HUL have been the top losers in this journey so far right now. Tanya.
Absolutely, Sakshi, and I would also like to mention that since the start of the month of April, the Nifty has surged by 17%. Now, obviously, this is fueled by inflows of over $18.9 billion DII. Inflows of $18.9 billion, and DIIs also bought around 33,397 odd crore rupees during this period. And if we talk about the broader markets, the mid-cap and the small-cap indices have seen even a more substantial rally, I would say, and they have risen by 41% and 47% respectively. So clearly, it's the broader markets, where all the action is happening, and we have been discussing about the broader markets. Nilesh, your thoughts, when it comes to, selective stocks from the broader markets, because some stocks from the mid caps and some stocks from the small caps like RVNL, IRFC, IRCON, they have delivered, multi-bagger returns already in the past 6 months. So do you think now is the time to book some profits from these counters?
Absolutely, Tanya, as I mentioned earlier as well. So I feel that we might see some profit booking in the broader markets. That's quite possible, but I think this is a good opportunity to get into the large cap names that we have already discussed. So even if you look at the Nifty index, which has hit a fresh all-time high mark beyond 20,000, but counters like Reliance Industries, HDFC Bank, State Bank of India, so these are the large caps which are still trading at corrected levels. So there is an opportunity I see. So going forward, if somebody is looking for some amount of comfort, some amount of less volatility, I think it's time to move into large cap names, and it is better to book profit from the broader markets.
Okay, absolutely. And experts also see, promising medium to long-term opportunities in India driven by investment cycles and policy reforms. So when we talk about that theme, Nilesh, any stocks that are on your radar?
So on that particular front, I haven't tracked any such counters. But what I feel is that if we talk about the reforms on the back of the summit that we recently had on G20 front, so I think power stocks where we have already witnessed a good run up. We might see some follow-up move in the power stocks as well. But I think the risk and reward at current level is not favorable. And I still feel that the focus should be on the large cap names, specifically from the banking space. So any sort of reforms will certainly give a boost to the banking space. So Bank Nifty, we are expecting Bank Nifty to move towards 46,500 to 47,000 levels in the September series.
Okay, absolutely. And even if we talk about auto and industrials, the valuations have become rich, but some experts
Right.
are still overweight, Sakshi, when we talk about auto and industrials, these spaces. And of course, we are
Sure.
heading into the election period also, so some sectors and some stocks are in focus ahead of that as well. Nilesh, your thoughts on any stocks from this, from auto and industrials that you would like to share?
We have been quite bullish on the Nifty Auto Index and also stocks. So if we look at the two-wheeler space, we are certainly liking the Hero MotoCorp, that particular counter
Sure.
that has given a strong reversal and looks positive for 3150 to 3200 sort of target on the upside. And this has been one of the underperformers within the auto space, but I think it's good time to accumulate this particular counter. And one can keep a stop loss below 2950. Apart from that, Mahindra and Mahindra, which is already trading near all-time high levels, that can be bought on declines.
Sure.
Maruti today fresh all-time high. I think it is heading towards 11,000 mark. It can be bought at current level given the breakout that we can see. It's called as a flag and pole sort of breakout. So the target comes around 11,000 to 11,500. Can be bought at current level, keeping stop loss below 10,200.
Right, okay. Let's also get in our special expert joining in on the phone with us. Mr. Dinshaw Irani joins in, the Chief Investment Officer of Helios India. Dinshaw, welcome to Business Today TV. What a day to have you with us. 20,000 finally on the Nifty. Your first thoughts on the kind of rally that we've seen and what lies ahead for the Nifty now?
So basically, that's what my feel is, that I think it's just one more milestone that the Nifty has achieved. 20,000, which is an achievement. In fact, I remember coming on some channels at 19,000 and telling them this is just another milestone and this is going to keep happening. In fact, my sincere suggestion to all the channels which have come on thus far is that now start calling people at every 5,000 milestone rather than 1,000, because that's going to be a reality going forward and going to happen much more often. So the fact is that this is probably the first time when the Nifty is at all-time high and the valuations are still reasonable. I'm talking about the narrow index right now. So basically, you're talking about an 18.5 PE, while if you look at the post-demon PE, it's around 19 plus times 1 year forward. So that gives us a lot of comfort that there is not much of fraud built up, at least on the narrow side. However, having said that, our also feel is that on the mid-cap side, since the mid-caps are limited to just 150 odd stocks, there is definitely too much of fraud getting built in, because too much of money is thrown into the mid-cap specific mutual funds, and that is creating a lot of fraud here. Again, on the small cap side, though there are narrow pockets where the fraud is there, but beyond the good part about the small cap is that anything beyond 250 is a small cap. So there's an option out there which you can dip into and still find some bargains on the valuation front, but not in the mid-cap space. So we'll be selective going forward from here on. Obviously, we'll be trimming names where we feel there's a lot of valuation that's getting stretched, and obviously looking at for ideas as in the coming power.
Would you hazard a guess as far as if I ask you what will be the year-end target for the Nifty to you? I mean, 52 sessions it is what it has taken for the Nifty to climb these 1,000 points. Is it going to be a shorter ride to 21K?
I won't be able to comment on that. But the fact is that if you're talking about your nominal GDP growth of 11%, that is pure math I'm working on, because if you're talking about, say, $5 trillion of GDP by CY 27, you're talking about roughly around 11% kind of nominal growth in GDP. And if you're talking about that, we're talking about roughly around 14% of Nifty growth. Percentage Nifty always gives you a delta. The index always gives you a delta over the GDP. And in the last 25 years, we've seen a 3% kind of delta. So we're talking about 14. So you work the math backward and you'll probably come to a figure which is like around, say, I think 20.5 by the end of this year or something. So you see why I'm talking about. But that's pure maths, right? But again, as I said, that earnings maybe in the short term we'll see some kind of pullback because, as I said, that there's a lot of froth in the market in certain pockets, and that may create an overhang on the markets to an extent. And frankly, I mean, I don't see this quarter to be, I'm talking about the September quarter, to be as robust as probably the June quarter was. And maybe you'll have to wait for the December quarter to things to play out again.
Any red flag, Dinshaw, to this run-up that we've already seen? Is there any kind of red flag that you see going forward? Any factor that could put as a headwind in front of the kind of rally that we've seen so far?
One is obvious that everybody is betting on a rate cut. Everybody believes that interest rates have peaked out. But let's not forget that crude has already touched $90 to a barrel, and that is, if anything, it's on the way up. So that may create a bit of a overhang on the inflation per se. So that may play a spoil sport. Plus, obviously, the monsoons which have really played truant in the last couple of months for us, that is also creating an overhang. One was thinking that the rural economy will kick in, but seems to have got delayed because of that. So these are all the factors that are making us a bit cautious in the next couple of months. I would rather, in fact, that's what we tell our clients, that if you want to come in today, you should stagger your investments rather than coming in one go.
Okay, well, thanks a lot, Dinshaw, for being with us and sharing this, wonderful day. And here's hoping for celebrating more such milestones with you along. And next time on the video platform and not on the phone with you. Thanks a lot for being with us, Dinshaw. Nilesh, let me come to you now. I wanted to understand from you, Adani Group stocks, that's also buzzing quite a lot in trade today. In fact, Adani Ports is the top gainer on the Nifty. The group market cap is at a 7-month high. We've seen the kind of volatility, the tough times the Adani Group stocks have faced in this entire year so far. But most of these stocks are handsomely into the green today. What would your call be on the Adani Group stocks now? Nilesh, could you unmute yourself, please?
Yeah, sure. Sorry for that. So I was saying, as a group, we don't have any coverage within this space, but I think a few names that we are liking from the technical point of view. So Adani Foods, one of them, where we have seen a good breakout on the daily time frame chart. So this particular stock, I think, is getting ready to move towards its previous all-time high mark of 1,000. Although it may take some time, but I think this particular counter within the Adani space, I think, is looking very promising at current level given the fresh breakout in today's trading session. And today as well, we have seen a good open interest concentration where we have seen 5% OI has been added. So good long build-up can be seen. I think in the near term, it is likely to move towards 950 and then 1000 mark can be bought at current level, keeping stop loss below 840. And apart from that, Adani Enterprise is another counter that is certainly showing some amount of strength. Today, we have witnessed good volume breakout in this particular counter. So this particular counter is looking positive for 2700 to 2750 in the near term, can be bought at current level, keeping stop loss 2550.
Okay, absolutely. That's the verdict coming in on Adani Group stocks, and Nifty, hits 20,000 a day after India's G20 win. That's the headline. That's something we are going to focus upon in the coming days as well. So thank you so much. Thank you so much, Nilesh, on that wonderful note, and thank you so much, Sakshi, for joining us on this wonderful occasion, I would say, for the Indian markets. Clearly on the back of the grand success of the G20 summit, Indian markets clearly celebrating, and we are also celebrating here as well. So on that wonderful note, it's time for me and my team to wrap up this special episode for you. But you don't have to go anywhere. You just have to stay tuned to Business Today television for all the latest market updates. So with that, it's a wrap up, but stay tuned and many thanks for watching.
What a glorious day to be a part of this wonderful journey that's unfolding on Dalal Street. How do you rate sentiment after this successful completion of the G20 event?